Rana Gupta is with us. He's Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Do you think what we've seen, this 800-point move, is the so-called tactical rally in anticipation of some kind of a deal with the US? When I say a deal, I don't mean a full FTA, BTA. I mean this 25% getting knocked off. Or do you think if that were to happen, then you will get a tactical rally from here? What's your sense?
I think let's step back a bit. I think the market is in the 24 to 26,000 range for last 1 year now, as the earnings cuts have happened and then the domestic economy has moderated somewhat. But going forward, we see there's a GST cut, income tax cut in February, RBI rate cut, adding up to the stimulus side, which kind of nearly offsets the headwind from US tariffs. From here on, if US tariffs were to go down, then this will turn into a net stimulus, and that could be pretty positive for the economy as well as the markets in our view.
Okay, so from here, what will you watch, Rana? I mean, is it just a game of waiting till growth picks up? Or are there any indications? I mean, I'm sure post the 22nd next week when these cuts go into effect, the street will want to see across product categories, consumption-wise, where are things picking up to expectations, because many of these sectors have reacted already in that sense.
Oh, absolutely. So I think irrespective of the rate, if and when US tariff goes down, it will be net positive to the economy. And even before that, even if let's say that were not to be the case and tariff were to stay at elevated 50 or 25% level, the government has given significant incentive through income tax cut, GST cut, rate cuts. So therefore, we believe the following three sectors or subsectors should see benefits, and that's why we are watching. Number one is auto. Auto is interest rate sensitive. Plus, for the last 2 to 3 years, barring SUVs, the sales have been pretty flat. So we expect definitely momentum to come back in that segment. Second, I think as a result of price of essentials going down, we do not think a person buys more of toothpaste and more of tea and all of it, but the savings on essentials can be spent on things like, let's say the food delivery, quick commerce, buying insurance products, or travel. And here, some of the internet platforms have very dominant presence. And third, in consumer durable. And we prefer playing the consumer durable through the manufacturing route. And also in the past, we have discussed that consumer durable electronics, these are growing areas, and how Indian companies are garnering more share by manufacturing in India. So that's the EMS part, that's also we like.
Mm-hmm. Okay. By the way, just looking at some more stocks on the move, Redington has started its run again. Yesterday, it was a 20% move. Today, it's 4%. Not sure if this is just sentiment ahead of iPhone. I think it's 17, right? The latest one is 17. Those sales, I think, kick off here in India today onwards. I'm not sure if it's just sentiment driven or something additional. But that's one for sure. Credit Access, about 3% higher. Watch out for the exporters. Gokuldas Exports is soaring 5% higher on this expected, breakthrough, some sort of a breakthrough in those tariffs. And Gokuldas is definitely on the move. Rana, great to have you in. On the exporters, actually, let me take up that piece. How do you look at them? Because the thing is, they're high-risk sectors, given all the tariff talk, whether it is your shrimp exporters. And, we had favorable news coming in from the EU, and the shrimp exporters completely went through the roof for two sessions. And there are the textile exporters, apparel exporters. Do you like this space at all? Are you playing it or totally avoiding?
So for investors like us, we like a bit of predictability, stability, and some right to win. India's textile export, while competitive, agriculture and other exports, they face stiff competition from some of our neighboring countries. So therefore, I think when the tariff goes up, they will react negatively, and the tariff goes down, they will react positively. Underlying business is perhaps stable, but the stock price are not as much. So therefore, what we prefer among triple exporters are the companies or the sectors where India has a right to win. And you can think of sectors like pharma, CDMO. In the small molecules, I think a lot of CDMO activity happens in China, circa 90%, and that's very high. And logically, even without going to geopolitical reason, I think there is reason when a country or a geography accounts for 90%, you begin to slowly diversify. And outside China, perhaps a bit of South Korea, India is the only place that can have that kind of domain expertise, which can support that kind of shift. So there, I think we like, and because this sector The India has a differentiating edge, and it's pretty difficult to compete with the Indian expertise, cost structures, and the product quality. So that's one sector on the export side we like.
All right. Hi, Rana. Good to see you win. What are the odds, though, give and take everything, after India's recent underperformance? Do you think, that premium as well that we enjoy in comparison to the other emerging markets, well, that's not a little bit, right, post this spate of underperformance. But we're still at around 55% premium in comparison to the peers. Do you think from here on, if you have a 12 to 18-month view, Indian markets will relatively outperform after underperforming?
I think from here to 12 to 18-month view for Indian markets to come back to our performance, that tariff where India is ahead of all the, or rather, India is worse off as compared to the Asian countries need to reverse. Most of the Asian countries are in 15 to 20. It needs to come back to at least that much for Indian market performance to resume. But let me add a bit more color to the India's underperformance and what's really going on. If you look at China and South Korea and Taiwan, the markets which has done well, or even Singapore for that matter, there are two legs to the story. One is AI, and second is the government or the regulator doing some terms of juice up or doing some value unlocking or giving some stimulus. In India, the AI leg is missing. Of course, the government leg is now kicking in. Now, emerging market investors' portfolio cannot be only AI. They would want to be emerging market consumers. And for that, India is the best place to go. Now, if the tariff remains high and given the stimulus given, I think India consumer and that sector will remain an attractive place. But once the tariff rolls back to in line with other Asian countries, I think then there is a case to buy other sectors, including the financials and the exporter sectors and all of them. So in short, I think even without tariff, Indian consumer sector looks pretty good. And for Indian markets to come back to our performance, I think the tariff needs to come down to at least to the other Asian markets level.
All right, let's talk about the BFSI space then. In the past, I think we have discussed about that the NBFCs are a space that you like in comparison to banks. How are you positioned right now on the banking and financial space? What do you like out there? And, between NBFCs and banks, and within banks, PSUs versus private, your take.
So in the BFSI space, with the RBI rate card, we were quite positive on the non-banks as well as the private banks. On the non-banking side, we continue to remain positive on the large companies. Albeit, I think in the smaller non-bank NBFCs, which lends to as a commercial vehicle or micro lab or small SME, there is stress, and there is no denying that. So NBFC, our view is pretty nuanced. I think the larger ones are okay. The smaller ones will still face some asset quality challenges. Something like a microfinance seems to be coming out of it, whereas the small lab, small SME and single CV and all that, they seem to be going into it. So again, one has to be very nuanced in which non-bank one has to go. Bank, we have continued to like the private banks. And I think as the consumption picks up, private banks will do well. See, private banks kind of underperformed in the later half of the Delhi last year also because the government stimulus policies were towards the industrial side. And industrial side benefits the PSU banks much more because they are those corporate capex lenders. Whereas if our thesis is right, and this time around the rally, at least initially led by the consumer sector, we do think the large private banks are at a pole position and they should do well. Their balance sheets are solid, their return ratios are good, and the valuation is not excessive. So we continue to like the top private bank space.
Yeah, no, absolutely. Just a bunch of other names, right? We got about 4:1 in terms of advances to decline ratio, and it's looking looking pretty solid in the broader market space. Even though for the Nifty it's about 50 points so far. Maybe just a few names, right? Reddington had a big day yesterday. And it's up about 1.25% this morning, but it's got the largest volumes on the NSE. Persistent is up about 3%. Persistent coming up with large volumes again. There's a 17% move on what is this? Platt IND but it's got the third largest volumes on the NSE. We'll try and see which one this is. Aventel is up about 2%. Tata Chemicals is up 3%. KRBL. We spoke with the management, I think, the day before yesterday, 2.5% higher in KRBL, 414. Premier Explosives, big explosive move, 7% higher on tremendous volumes as well for this point in the day. And you'll see that coming up on your screens. There's Wellspun Living, about 6% gains here. Gokuldas, of course, back above 800. And I can go down the list. There's Castrol, KNR Construction, Mahindra Life Spaces. It's picking up quite nicely in terms of volume-led gains. Credit Access, just looking at Credit Access, the low in, this year was about what? It's basically not doubled, but low was about 750. And stocks, 1350 now on Credit Access. So big one from the lows coming through on that one. Rana, just a last quick word on this entire data center opportunity. We've been having this discussion last couple of days. Any stocks here that you own in your portfolio on the back of it, that is the pointed large theme, the reason why you own a name?
Data center is, of course, a big opportunity, but the data center requires a lot of capex. And we think, based on our understanding in India, what's happening, the larger players are going to win. In terms of if you want to distill it down to the stock, it will be this company is a very large, one of the largest groups that you can think in India. So how much data center will add to the stock price is a matter of debate. Nonetheless, I think the larger telecom companies in India, they are doing very well in data centers. And going forward, as data center revenue picks up, they will become a quasi data center kind of a play going forward. But right now, the contribution of data center in the total valuation is quite low, but is going to increase over a period of time.
Okay. All right, Rana, we'll leave it on that note for this morning. Thank you very much for joining in and giving us your perspective on the market.